Let's welcome in our morning guest. T.S. Harihar is with us. Ruchit Jain, Meghna Malkan, as well as Vijay Chopra are now with us. T.S., let me start with you. What are the picks that you have?
See, I think we are getting into a fairly, I would say, eventful and interesting week because on one hand, there is a data in the form of the GDP data. There is a PMI manufacturing that is likely to come out. There are a lot of US data points that are expected. But I think more importantly, we await the clarification of the RBI on what they mean by the 100% incremental CRR, because I think that could actually, if what we understand is right, that would imply about 3,25,000 crores of deposits being taken over by the RBI for zero interest rates. That could be a big hit for the banks. So we are awaiting clarification on that. So I think our strategy is broadly around export-oriented companies and a negative on banks. So our first call is we are long on Tech Mahindra with a target of about 470, 480 or about 540 on the stock. We also like Sharda Cropchem, which is an old favorite of ours, the specialty chemical space. Where we have an internal target of close to about 450 on Sharda Cropchem. And our third pick is we are short on ICICI Bank, where we expect the pressure of overvaluation and the pressure of this higher cost to take the stock down to about the 230 level. So these are our three broad stocks for the day.
Harihar, just quickly before opening, for the IT sector, do you think markets is factoring in a stronger dollar?
Oh, I think definitely. In fact, I was, seeing some of the brokerage reports. I think Deutsche has come out with a target of about 72.5 on the INR by end of 2017. I think the broad consensus seems to be that the rupee could go beyond 70. Eventually that's the level we may end up at. So definitely, I think they are beginning to factor, and probably we could see a little more of this weak rupee getting factored into IT prices, which is why I think IT probably remains that one island of outperformance in the entire market, which is quite confused at this point of time.
Right. Harihar, how would you look at some of the NBFC names? Their deposit rates may come down, but lending rates may not come down, and that's why NBFC's cost of funding may not decline.
See, I think NBFCs, Pankaj, across the board are going to see a very, very sharp compression of NIMs, because the big advantage that a lot of NBFCs were boasting in the last couple of quarters was that their NIMs were substantially better than the banks. I think that is not going to happen any longer. NBFCs are going to see a massive squeeze as far as the NIMs are concerned. See, I'm skeptical about the entire financial sector, and I'll tell you why. See, nearly about 300,000 or 3 lakh crores of deposits are now going to earn zero interest. Now, assume that even if the banks had put this in the call market, they would have got about 6%. So 6% of 3 lakh crores is about 18,000 crores. Now, 18,000 crores lost is probably more than the entire profitability of the PSU banking sector for the last 2 or 3 years.
No, but that is, you're assuming that it will be for the entire year. But RBI has said that it's for the next 15 days and they would, look at it going ahead.
No, see, my understanding is, whatever limited I understand about this, is that the government's logic is that whatever money has come into the banking system is not out of the achievements of the banks, but out of the achievements of the government.
Right.
And therefore, the money needs to go to the RBI. I don't think this money is going to come back to the banks, because if they wanted to put it back into the banks, I don't think they would have taken it to the RBI anyway. So I think the idea is that it is going to go to the RBI. It is not going to remain with the PSU banks.
Right. And, say if, this also is signaling that, sharp rate cuts may not be expected in the near term, which is something which the street was factoring in after deposit rate cuts from some of the top banks?
See, we were anyway not expecting a rate cut in December, because there is a very crucial Fed meet that comes up in mid-December. So I don't think the RBI would be venturing a rate cut in December anyway. February was when the rate cut was actually expected. But I think, as the RBI says, we will review on December 9th. But my hunch is they won't review on December 9th, and this will continue. And if that happens, I think rates could either be steady, or you should even be prepared for a hardening of yields from these levels.
Harihar, what will be your view on oil marketing companies? They are looking good today. Is it just because crude prices fell by about 4% or, it's a basic necessity, and come what may the shortage of liquidity, you would see, if the prices are free, that is, if they continue to be adjusted every 12 days, there should be no problem in their volumes or their estimates?
No, I don't think liquidity is a big issue as far as the downstream marketing, oil marketing companies are concerned. I think what the market seems to be betting on is that the November 30th meeting of the OPEC is going to be another damn squib. And that will mean that there is going to be no agreement as far as quotas are concerned. And that would only mean that the oil price could actually start falling very decisively below the 50 mark. I think it's been struggling to touch the 50 mark over the last few days. But I think once the November 30th meet gets over, they're expecting the crude crude prices to start falling sharply below the 50 mark and probably settle around the 43, 44. So I think that is what the market seems to be betting on, and that is going to be very, very positive as far as the oil marketing companies are concerned. So we continue to stay positive on oil marketing because we think that the domestic consumption story is nothing to do with whatever is happening on oil or downstream oil.
Right. But just quickly, would you want to buy them now after this 3% move or just wait for a bad day?
No, at this point of time, the only stocks I would really like to buy are the IT stocks. I don't think I would buy any other Indian stock at this point of time.
Right. Harihar, thank you. Thank you so much for joining us. Just before we go, Harihar, let's start with you. What are the disclosures?
See, of the stocks that I had mentioned, I have a holding as far as Tech Mahindra is concerned, but you can assume that the other stocks we have recommended to our clients at different points of time.
Right.